And then we used what's called a handheld laser gun. It's a LIBS or a LIBS. So we used that handheld gun. We got over 1% lithium, 1,200 parts per million lithium at surface. But I think in terms of competitive advantage, you really want to look within Claystones itself. So within that silo of lithium mining, really what it comes down to is cost of separation of that lithium from the clay. What we were able to ascertain is with a very weak acid called the Regia acid. It's one of the weakest acids you can use. The lithium just separated, so we had up to 98% recovery, which is incredible.
So welcome, Justin, to the YouTube channel. It is a true pleasure to have you on here and to pick your brain on, for example, lithium and Rover Metals as a company. So yeah, welcome to the YouTube channel.
Hey, listen, it's great to be here. I really appreciate you having me.
Perfect. If you could, in either 1 or 2 minutes, could you shortly explain who you are and what Rover Metals actually is?
Yeah, right on. So I've been a mining executive for just over 10 years. Started in the business as the chief financial officer. So my education and background is technical in accounting and finance. Really going back 15 years, I worked at Grant Thornton as an auditor. So I learned the public company side of the business as well as the mining side of the business kind of from the number 2 seat as the CFO. So, got good mentorship along the way from some really well-seasoned board of directors in the mining industry, as well as some, very well-seasoned CEOs and geologists. And so my geology sort of background and education, if you will, that's been something that's just been learned on the job in the last 10 to 12 years, but thankfully I'm smart enough to pick that up too, right? So I also continue to surround me in terms of our company and our personnel with really smart technical geological people as well as professional mine engineers. So the team is really got a comprehensive background for discoveries, and we have a certain model that is sort of proven to work with finding these projects. There are certain things that we look for when we take on these projects, and I'll get into the specifics of that. I think with our new signature asset, which is the Let's Go Lithium project, I could talk on that question. I can talk about why specifically we went after that project.
Right, thanks for that short introduction. That's for sure a great overview of your background. But could you perhaps shortly explain what Rover Metals actually does and is at the current moment in time?
Yeah, absolutely. So, I think our specialty is acquiring early stage projects, acquiring 100% ownership of early stage projects that have the potential to become mines. And so, for all the projects we have, which includes lithium, it includes copper, zinc, and silver, and it also includes gold, all these projects are situated next to either past producing mines or companies that are, a few years away from having mines. There's infrastructure in terms of roads, green electric hydro, which is, very important in the modern day. So that's, those are our projects. We move them very quickly through sort of the phase 1 exploration, which is sort of gives you the indication on whether you should keep or drop that project. We get them permitted quickly, and then we drill them. And, drilling is obviously the excitement for getting involved in our sector. And so, across the board, all of our projects are in good standing. In Canada, we have, for the projects that need First Nation endorsement, we have that. Of course, in Nevada in the United States, that's not applicable. It's really a federal government mining licenses, which is all you need. So that's another reason why we like Nevada as a jurisdiction as well. So, that's a brief overview of the company. We're, I would say, definitely an early stage explorer, but I think we're also in the next 2 to 3 years of this mining cycle, we'll be bringing our first major resources, to market and growing, to a later stage mining company here. That's our path for growth in the next 3 to 4 years.
Perfect. Thanks for that short introduction, and we'll for sure dive a bit deeper into that path to growth later on in this interview. Like you perfectly described, Rover Metals is an exploration company at this moment in time, but with a really exciting pipeline, that's for sure. But yeah, the main property of interest that you've already described, in my opinion, is Go Lithium. So I'd love to dive a bit deeper into that. And specifically that it is a claystone type of lithium resource. Could you perhaps explain to the viewers at home what a claystone lithium resource actually is? And I would love it if you could also dive into how it differentiates from a more traditional brine lithium resource and a hard rock lithium resource as well.
Yeah, right on. For sure. So I think, as you'd mentioned, within lithium mining right now, as it stands today, without emerging technologies that are being worked on, but as the industry stands today, there's 3 methods of mining lithium. One is brine, which is, we've seen the pictures from Chile and Argentina. It almost looks like these giant salt flats that are flooded with water. So it's a very water intensive process for brine. I guess right now, no matter where you go in the world, water is a key consideration in mining. So it's not the most environmentally friendly approach. And then, especially if you were to bring that to North America and specifically the United States, and to support the US EV sector, it's well known, much like it is in Europe, that water resources are depleting and water tables are an issue. So that's why we like claystone. Claystone is a similar, close to surface, but it uses a weak Regia acid solution. I mean, listen, acid in mining can be treated, and in some cases the byproduct, if depending on your flow sheet, can be something like, honestly, Epsom salt. So it's a very weak acid mixed with water, so it uses less water. And again, it's near surface. The third type of lithium mining is hard rock, and hard rock can be invasive depending on where it is, and it's underground mining. It's expensive. You need super high grade, and you need a healthy price of lithium, because the cash cost per production ton is higher than with brine and with clay. So I think right now, as more supply of lithium comes on, there's still not enough. I mean, even with new supply, the cash cost per ton of a claystone project is typically US $3,500, so $3,500, and that's a profitable production point. In our case, our clay is within a meter from surface, so essentially you just pull back the desert sand on surface and you open pit, and just strip the clay off. It's pretty cheap and economical. And if you've ever been to central Nevada or southwest Nevada, you'll know that no one lives there. I mean, it really is a barren desert. So this is a great place to be building a mine, because there's no natural species. I mean, when I say no one lives there, I mean no animals live there either, right? So these are places like Nevada are great places to have mines, because there's not sensitive ecosystems in place. And there was a few other questions there. What else? Was there one other there that you wanted me to touch on? I think I forgot, so remind me.
No, I think you did a really good overview of the question I actually asked you, so great job on that. But basically, what I've gathered from what you said is that it's more environmental friendly because it uses less water, and that it's for sure cheaper on an operational expenditure front compared to hard rock. Is that correct?
Yeah, that's correct, for sure.
Okay. Can we perhaps compare it also to lithium brine in an operational expenditure context?
Yeah, absolutely. The comparables that most of these brine operations are in South America, so labor, of course, being cheaper in South America. So that's the industry numbers that I have include, obviously, Chile and Argentina. So they're even lower. It can be as low as $2,500 US, $2,500 per ton for brine. But there's a median range, because obviously in North America and in Nevada, There is a brine mine that's Albemarle, and so it could be up to 3,500 per ton. For projects like Albemarle, which puts it right on par with a Claystone project, really. And I think up until a month ago, there was only one producing lithium mine in North America. I believe they have one that's just recently started now in Quebec, but we're about a 4-hour drive from that Albemarle. So that just shows you we're in the same lake bed sediments, in Nevada there, which is, a great location. Obviously, with Tesla also being in Reno, the Tesla Gigafactory, well aligned for our business model.
Perfect. And we're going to dive a bit deeper into that Tesla story in just a bit. But I have one more question regarding the different types of lithium source rock. Can we also compare them in capital expenditures required to start up a mine in these type of resources, or is that a really hard comparison to make? Because of course, to an investment, operational expenditures really matter, but how much upfront capital is required also really matters. So I was curious if there was a comparison that we can make here, or if that's too hard to do.
Definitely, I do have some numbers on that, but the Claystone projects are about to go into production. As it stands today, there is no Claystone Lithium project producing. That being said, we do have feasibility studies. For example, the Rhyolite Ridge project, which is owned by Ioneer, they're at feasibility, and they're in Nevada. They're close to Reno as well, and so the U.S. government has gone through their feasibility, and under the sort of Defense Production Act, they are getting a government low interest loan for $700 million, and so that's roughly on par with mining as a whole, like regardless of mineral. Like for a gold mine, $500 million is sort of a rule of thumb to build a refinery. So in Rhyolite Ridge's case, they also have, I think, a significant amount of boron. So it's not just pure play lithium. So they're actually most likely building a refinery for those two items. Whereas, some of these other projects, for example, Century Lithium or American Lithium, which are also around Tonopah, Nevada, close to us, I think those will be pure play lithium claystones. And so it's yet to be seen on the pure play lithium claystone what the capex is, but so far, I would say $500 million from what I've seen is, should be the norm.
Okay, that sounds really.
That includes, of course, that includes the refinery too, not just the processing mill. That includes the refinery as well, right?
Makes perfect sense, and it sounds really comparable to some of the numbers I've seen floating around. So thanks for that color on that. Now I would like to dive a bit deeper into the information your company currently has on Let's Go Lithium, because I think to a lot of investors, knowing at what stage a company is and what information they actually have on the property at that stage is kind of hard to figure out, actually. So I would love it if you could lay out what information the company currently has on Let's Go Lithium and what it's trying to gather over the next couple of years as it's trying to develop its resource.
Absolutely, yeah. So we starting in October of last year, we did do a phase 1 exploration program on the Let's Go Lithium project, and just to outline what that meant was we gathered all the information that was available within sort of a 7-mile or 11-kilometer jurisdiction, because there had been historical production of mines in that area from these, we'll just call them rare clay stones, like they're industrial clays. So they have, they have had historic production in this area in our immediate vicinity, which is Armagosa Valley, close to, we're about an hour and a half northwest of Las Vegas. So that's Armagosa Valley. So there is comparables there. There's also a private company that is still operating, that has been operating since 1966. So, we access what was available on that company. All this is available in our PowerPoint on our website if people want to do further research. And we also were able to get, for this specific location, directly on our claims, on our mining claims, the U.S. Geological Survey had drilled 9 water wells. For whatever reason, I don't know why they drilled water wells, but they did. And they did log the core from those water wells. So as an example, for part of our phase 1 program, we looked at the logs. They didn't have any assays, unfortunately, but they did log the clay bed, the thickness, and where it starts. And so that's how we know the clay starts like within a meter of surface, and also that it goes down to an average, sort of depth of, about 100 meters. So on average, we believe this clay body across 6,000 acres or 25 square kilometers, we believe this to carry, about 100 meters of average thickness on this clay bed, which is great. This is what we wanted. We wanted it near surface. We wanted the potential to get to, 5 million tons or 7 million tons of lithium carbonate. And we're just, the companies that are 3 or 4 years ahead of us, that's the size of land package they needed, because these lake bed sediments, they just kind of dry up. And, it's not like narrow vein mining, they're huge deposits, right? And so that was really the research we did as well when we staked this and announced our land package, is we looked at comparable projects in the area that were, ahead of us. And then, of course, we did a systematic surface sampling, and then we got some great assay results on that. And then we used what's called a handheld laser gun. It's a LIBS or a LIBS. And for lithium, this is the geologists, for example, at American Lithium for the TLC project, which is north of us in Tonopah, Nevada. That's what they've been using to identify the higher grade parts of the project. So we used that handheld gun, and we got over 1% lithium with that handheld gun. By 1%, I mean it was actually 1,200 parts per million lithium at surface. Of course, having the clay beds down to 100 meters, we expect the higher grade to be, sort of roughly at 60 meters, right? So that's what we've done. That's the data we've done. Now we've gone on. There'll be obviously the release of this interview will be well timed with the news release on receiving our drill permit, so I can openly talk about that. So obviously now we've got the drill permit, which is going to allow us to go in and really determine from our 6,000 acres, where does the lithium end in our claim boundary? Where's the highest grade? And then once we identified where the highest grade is, that's where we'll be, doing our second drill program. Hopefully, not too far down the road, to really focus on the high grade part of the project. But we expect to start drilling hopefully this summer. Like the plan is the June, July timeframe to be drilling the first maiden drill program on this project. So that's the near term timeline. Over the next 2 years, we obviously want to be publishing our maiden resource. So doing another drill program. Let's just hope, because the nice thing about Nevada is it is year round. So in the fall or early winter of this year would be hopefully subject to capital markets, but our ability to finance this and get back there drilling for a second program this year is where we want to be, right? So.
Perfect. I think that's a really great explanation, especially for the people that might not be as familiar with mining companies. Thank you for that color. Really insightful. The next topic I want to discuss is actually Tesla. So a bit of backstory for the viewers at home. Justin and I actually already had a small conversation on Wednesday to discuss the specifics of this call. And you, Johnson, after my question, started hinting at a potential story evolving around Tesla. Of course, with them being the largest EV manufacturer in the world, and actually one of the only ones which are able to produce electric vehicles profitably, it's for sure a company to look out for if you're going to be exploring lithium. Justin, if you're able to, I would love you to dive a bit deeper into that Tesla story right now. So perhaps Tesla, lithium, and especially how it could tie into ROVR Metals into that story, if you would.
Yeah, for sure. I mean, I think we definitely want to include a company called Albemarle in this conversation. So Albemarle is, as I'd mentioned, up until a month ago, the only producing lithium mine in North America. They're producing in Tonopah, Nevada, which is just south of the Tesla Gigafactory. So, I don't have the stats on how much of their production goes to Tesla, but I would certainly think that a good amount of their lithium does go to Tesla. So I would think that surrounding Albemarle right now, there's roughly 20 million tons of lithium carbonate in junior miners. So I could name them as an example, like you've got Nevada Lithium, you've got Ioneer, you've got American Lithium, you've got Century Lithium. So, whether or not Albemarle, wants to increase their essentially their mine lives by acquiring these other companies, or whether these companies just, go into production, because besides Tesla, you've also got General Motors, of course, and all the big American automotive. So, but I mean, certainly 20 million tons, which is the current sort of reserve in the area, if you will, that doesn't go very far. I think that would go about 10 years just for, current world consumption. But Europe, as really the big four automotive in the US, which includes like General Motors, they're just starting to launch like the F-150 Lightning, the Chevy Silverado SRT, which is Chevy's all-electric vehicle. That doesn't launch until September of this year. So, there's just getting going. So I think the 2 million tons is going to quickly escalate. And then you've got things like, semi-trucks, city buses, like in Tesla's case, you've got, power packs that feed into solar on the roof. So the demand is far past just cell phones and the Tesla Model S, if you will. So let's just say 10 years on existing resource, but I think there's a huge scale coming. So for us, we're obviously looking at the industry from a 20 to 30 year perspective. Yes, we're 3 years behind our neighbors, but the demand is there, and encourage the viewer to do their research on demand supply, fundamentals. Of course, we like being in a safe political jurisdiction, which is the United States, zero risk of nationalization. And so that's sort of the Tesla story. I would think that we're most likely to feed into the mine life of one of these later stage mining companies. I wouldn't see Rover as being the lead horse for doing a deal with lithium. I think it would be more likely, one of our neighbors, but there's been mining analysts to predict that this area is very ripe for consolidation, and so that bodes well for our business.
Wow, that's for sure a really exciting story. So I'm happy we included it in this way. Now we've mainly been talking about Let's Go Lithium, which is of course I would say your flagship or most interesting property, but it's not even close to the only property ROVR Metals owns. So I would love it if you could dive shortly into the other properties you have and whether you're exploring them at this moment as well, or they're just more like dormant assets for later use.
Yeah, they're great assets. I wouldn't refer to them as dormant. I think they're just more meant for a bit of a stronger copper, zinc, and gold market. And so we're looking at 2024. For development. We've got a little bit of work that we'll do. These projects are located in Northern Canada. There's been, within the Canadian federal budget, hints of there being government money available for critical minerals. So, of course, that's best for our shareholders, is also to kind of, that's less dilutive capital for us. So, if you're just looking at, share structure, number of shares outstanding, if the government is coming to the table here, it's best for our shareholders to wait, as well as these, also in Europe, and even President Biden in his recent trip to Canada indicated there may be US money available for Canadian critical minerals projects, and, copper and zinc are on that list, as is silver. So we have this project, which is the IML project in Northern Canada, which is a major greenstone belt, so volcanic massive sulfide on this project, and those things will typically carry an abundance of copper, zinc, and silver. And so there's a historic resource, large one. We've got 1.5 million tons of sort of mineralized ore. There's 150,000 tons of zinc, 5 million ounces of high-grade silver, like at 130 grams per ton silver, and then there's roughly 15,000 tons of copper on the historic. But the land package is ginormous. It's 30,000 acres, so that resource is only coming from 2% of that 30,000 acres, and so we've just gone and really secured on the claims. Really, it's one of the last sort of virgin greenstone belts that has access. We have barge access from up a lake to get there. So that's an exciting project. We like it. We want to see just more, European and American and Canadian government money. There's been commitments in the budgets, but as it stands today, they haven't get any clarity on how they're dispersing it. So that's why it's a 2024 project. We have a gold project as well. I mean, gold's back flirting with 2,100 an ounce gold, over $2,000 an ounce right now. So that project, we've put $4 million Canadian dollars into exploration over the last 4 years. We have about 120,000 ounces of gold, grading roughly 8 grams per ton on that project. That's a project again that either we may option it off and let another group take a carried interest. We'll retain a royalty on it, or depending on gold markets, it gives us an option for 2024 as well for development. But really, as you'd already mentioned, our focus really is the lithium project. When the drillers are on site and that project's moving forward, that's when management really has time to promote and develop these other projects. They will remain secondary projects, and we're not going to take the dilution for anything except the growth of the lithium asset.
Okay, perfect. Thanks for the bit of color regarding the priorities of the company regarding its own properties. Now the follow-up question I would like to ask is regarding cash, because exploring one resource, of course, takes capital. If you want to explore more resource, it will take more capital. So cash and capital is really important for an exploration company. And I've been trying to paint a picture surrounding the current capitalization of the company, and this is what I've been able to find. So on the 3rd of September 2022, the company had $50,000 Canadian on its balance sheet, and on the 27th of February 2023, the company acquired $880,000 Canadian through a capital raise. So in total, from my estimations, the company should have slightly less than $1 million in cash access to right now. Is that picture close to correct regarding the current capitalization of Rover Metals, or did I miss something majorly?
I would say cut your estimate in half. We finished the acquisition of the Go Lithium project in Q4 of last year. We also, as I'd mentioned at the top of the interview, we did a phase 1 exploration program. And so, and then, we've just, recommitted also some capital to the annual holding costs of our other projects, which is the gold, the copper, and the zinc. And, things like annual financial statement audits, all that fun stuff. So we're actually, our cash position is actually $300,000 today. And so healthy position, but we're going in most likely come end of May. We'll do a small top-up capital raise to pay for the drilling in Nevada. The program is just budgeted at between 200 to 400,000 Canadian dollars. So that's not a lot compared to some exploration programs you hear about. It's just because the nature of this type of geology and by being Nevada. So this is not the cash cost per ton, which is a stat we like to use in the mining industry for drilling costs, which includes everything up to the assays. This project is budgeted at roughly $200 Canadian per, I should say the cash cost per meter. That's what I meant to say. The cash cost per drill meter for this project is $200 Canadian. So that goes a long way. We're trying to do between 10 to 20 holes. So, that'll be the capital raise we do in late May.
Perfect. And you already answered my follow-up question regarding capital requirements over the next couple of months. So perfect. Thanks for your answer. So the next question I want to ask was actually regarding competitive advantages. So of course, I was analyzing your company before this interview, and I was doing so from an investor perspective because, of course, it's an investor YouTube channel. And for investors, competitive advantages should be central in their thesis of finding the next stock pick. Now, competitive advantage for mining companies can come in plenty of forms. They can come in the form of grading, so having really pure resource. Metallurgical factors can play a role. But in the current environment, especially with lithium, water can also play a significant role, which you've already touched upon during the start of our conversation. And if my information is correct, the company actually already has access to water rights. So I would love it if you could surely explain what water rights are and why they're so important for lithium miners specifically. And perhaps if you could tie it back into a competitive advantage as well, because that's a lens that an investor might look through while analyzing your company.
Absolutely, yeah. So we, as part of the phase 1 program where we talked about starting that in October of last year, we obviously, once we got those assay results back, that was the first thing we started working on. We also needed to have secured water rights with a contractor prior to applying to get those water rights approved by the U.S. Bureau of Land Management. So it was sort of a 2-step process. First, find somebody willing to sell the water, but B, then getting the U.S. government to approve that volume of water use. And so we obviously didn't want to have to truck it in from far. So we were fortunate of being able to get local water in the immediate vicinity. And then when we submitted that, we got approval from the U.S. government. I mean, that's sort of soup to nuts right there on the water right process. It can be hard to get for sure. I think at the beginning of the call, I talked about there being water wells on the project. So what that means is when we go for our next stage of mining permit and, down the road, if we were to go, at applying for a production permit, we strongly believe that we're actually going to be able to tap the water on site because there is water, fresh water too. It's not salt water, which is nice. But I think in terms of competitive advantage, you really want to look within Claystones itself. So within that silo of lithium mining, what separates the good Claystone deposits from the not so good ones? And really what it comes down to is cost of separation of that lithium from the clay. And in some cases, I'm not a metallurgist, but this is having talked to metallurgists and industry experts. In some cases, the clay is hard, it's baked to the lithium, and so it's hard to separate the two. And so what you do is you would take a sample, a grab sample or a core sample, and you would run it obviously through a test to see what that's like. Well, we've done that step. What we were able to ascertain is with a very weak acid called the Regia acid. It's one of the weakest acids you can use. The lithium just separated. So we had up to 98% recovery, which is incredible. And that's, the average right now across a large resource is roughly 84%. So those are the best case players, which is the American Lithium's TLC project and the Century Lithium's Clayton Valley project. Those two projects also have the lithium is very loosely attached. In other cases where there could be other minerals there's no value to those minerals that are attached on there, then you have to use a stronger acid to bake it off. And so I think that's what's exciting about our project. That's a competitive advantage, is low cost separation. Also, I think from an environmental perspective, it's also, that's more environmentally friendly. That helps us down the road as we do later stage permitting work. So that's a competitive advantage for us as well.
Perfect. Thanks for the analysis. It's really insightful to hear an industry expert in this sense compared to a retail investor talk about competitive advantages in mining. So thank you for your information and expertise regarding that. Last real question from my side, Judson. Perhaps you could give us a rough timeline sketch for Rover Metals. So what we can expect on the short to medium to long term from Rover Metals.
Yeah, I mean, I touched on that a little bit, but it's great to kind of leave some salient points or opportunity summaries for the investor. I think right now, if you're looking at the life cycle of investment into a mining company, where do you have the potential for the biggest gains in the stock market? Well, I think it's at the discovery stage. You've got that's like where essentially where we're headed. We're going to drill and really have. The drill is ultimately what is the proof of concept here for our industry. So that first drill program is, we're planning on it for this summer, and then the resource disclosure, as we talked about. So that's something within the next 2 years. That's probably the biggest near-term appreciation in market cap of our company is our first resource disclosure, and then. Certainly as critical minerals continue to get government support, if we're able to access low-cost government funding to grow our zinc and copper and silver into mine production, that's sort of a medium range growth target. By medium range, I mean 3 to 4 years. So. I mean, we've got a younger management team. I think we're certainly capable of seeing this through, and we're excited about doing that. And so I think you're also backing the right management team as well. And we obviously believe in electrification, a greener planet. So that's also conscious investment as well, which is part of our essentially our corporate philosophy and corporate goals.
Well, perfect. Judson, I think that was a really great overview of the short-term catalyst that an investor might expect. I really want to thank you for your time, your knowledge, and your expertise during this interview, so I really appreciate that. I also want to give you a bit of time if you want to add something that we haven't discussed thus far. So if there's a topic you want to discuss, which I didn't ask regarding, please feel free to talk about it now.
No, I think we've covered it. It's not an overly complicated business model, as you can appreciate. It's we're just at the stage of resource definition and drilling. In 2 to 3 years' time, we may be having these discussions about capex to build a mill and a refinery, and obviously that's sort of the second stage of growth for a company of ours. So
great. So perhaps you can now share where the viewers can follow you and can follow the company.
Absolutely. I just encourage them to visit our website at ROVR Metals, ROVR Metals.com. And, all the investor materials are on the site. And obviously they can contact the company with any questions on top of that. Yeah.
Okay, perfect. I'll make sure to share the website link down below. Now I'm going to do a short outro, Judson. So if you can just hold on for 1 second. Thank you so much for watching. I love you all. Peace.